Hi, it's Chris Titley here. As part of the Sub 11 podcast series, I'm joined by Dr. Mike Jones, Managing Director of Impact Minerals. Mike, thanks so much for being part of this podcast.
Not a problem, Chris, and great to be here.
Mike, for the listeners out there that know nothing about Impact Minerals, can you give a bit of an understanding about the history of the company and a little bit about the background of yourself and your intertwinement with the company?
Impact Minerals, we listed on the ASX back in 2006, and I was the founding managing director, still in the role. We decided to list the company after a long period of consulting. I was a consultant geologist, exploration geologist for many junior and also major companies for a long period of time before that. And eventually came to the conclusion, look, we can explore just as well as these juniors. Let's get in there and give it a go ourselves. And it has been a much longer journey than I thought it would have been in terms of getting to a successful outcome. But we really set Impact up to find a world-class ore body. My first job was actually in target generation for Western Mining Corporation, a company that many of your listeners may have heard of. Eventually got taken out by BHP for the Olympic Dam mine, mostly. And I was very lucky to work in that team there and was sort of exposed to many ideas about looking for world-class ore bodies. And it's been my experience in all of our time being listed that anything less is literally not worth getting out of bed for. So many one-mine companies, small producers, they really very, very rarely go anywhere. You're better off not doing anything and just going for the big win, like a De Grey, 16, 17 years, and then bam, 10 million ounce ore body discovery. And that was really the principle of Impact. So we've been there, we've been around the world, drilled a whole lot of holes, found a few small things, but we just didn't have that bit of luck that you need to go along with the discovery to get to the world-class project. And eventually, though, we ended up with our Lake Hope high purity alumina project. I believe it is world-class. We found it on LinkedIn, of all places.
Oh, wow. Okay.
And, story in there in itself.
Yeah.
And that's where we are today, pushing that through on a pre-feasibility study.
Fantastic. And in regards to the commodity, were you looking sort of commodity agnostic for world-class projects, or there's a particular commodity that you're looking at initially that now that you've found and you're excited about?
Well, we never veered away from sort of the top five, if you like, which was gold, copper, nickel. We had uranium when we first started. We got Fukushima'd, as I like to say.
Oh, yes, I remember that. The market got a bit of a shake around then, Tom. It was about 4 or 5%, I remember.
A big deal on the table the weekend that happened, which was rather unfortunate. Gold, copper, nickel, a little bit of lead and zinc, and really didn't steer away from that for all of that time. If there's anything I would have done, probably got into the lithium boom a little bit earlier. And that's because lithium steered away from it because there's lithium everywhere, right? And we're almost drowning in lithium, right now. It is a bulk commodity, but could have actually got into that space a little bit earlier if we'd had in hindsight. So, but we've had, as I mentioned, we had some reasonable small discoveries, but they never grew. So that was where we found ourselves, and until, as I mentioned, we came across this Lake Hope project, which is actually high purity alumina. It's an industrial mineral, and that's where we find ourselves today.
And Mike, can you talk about some of the recent milestones and development within that project?
So we got into the project last March. So we've had it, 16 months. And it's a very unique deposit because the material that we take to convert into high purity alumina occurs in a dry salt lake bed in sediments that are only about 2 meters thick. And there's a couple of processes by which we can convert that into high purity alumina. And you can imagine that in a lake like that the mining and transport costs are minimal, and so we believe that we have the ability to produce high purity alumina, which is a specialist material at extremely low cost compared to many others globally, and that that's going to be our entry point to the marketplace.
Can you talk about your ownership in that project and how that was derived around 80%?
So the structured deal that we had was that we can get 80% of the project by completing a pre-feasibility study. We completed a scoping study last November, which had some very attractive economics around it, indicating extremely low cost of production. And so we're now firming those numbers up as best we can in the pre-feasibility study, which is on schedule at the moment to be finished by the end of this year. And if we triggered to go forward after that PFS, then we will issue more shares to the private group that owns it and move to an 80% ownership of the project and also the intellectual property behind it as well. So it's all systems go at the moment.
And Mike, when it comes to deriving a net present value of the particular project, I think it's around 1.3 billion you put in the last quarterly. Can you talk about the swings of the price and obviously your views on the particular price that could sort of swing that up or down?
So the price of HPA is very much determined by the offtake agreement that you might have with a client or customer. It is in the industrial mineral space. So when you do an NPV based on a particular price, it is there is a lot of potential variation in that price. And we always refer to a company called Alpha HPA Limited. A4N is their code. They've been extremely successful in the HPA space, have a market cap at the moment of about $1 billion. And they produce a basket of different products. And but they also do a calculation of what the average basket price is, if you like. And so HPA is selling for somewhere between $20,000 per ton and in excess of $30,000 to $40,000 a ton, which is very high for very special high purity products. Now, we'll emphasize that at the higher purity and the very specialized end uses, there's not a particularly large market there. So it's really all about where's the volume for us, where are the major users of HPA. And so, the NPV is obviously sensitive to the basket price, but that's how we come up with the number.
Yep, fantastic. And then obviously the capital required for such a project is quite large along the way, and you've recently raised some money. Can you talk about the use of funds and I suppose what the project might cost?
So the funds we just raised is really going to take us through to the end of the pre-feasibility study. So we're fully funded to do that, which is great. And we got some great support from top 10 shareholders. So 2/3 of the money we raised came from our top 10. So that was a great vote of support. We also raised a bit of money from some listed options at 2 cents, and we sort of traded in and around that level as the options were coming to expiry, and we still raised $750,000 from our smaller shareholders. So we got support from the big end of town and the small end of town. So it was a very good outcome. Because of the nature of the project, the in-ground value is the equivalent of something like 10 million ounces of gold at an average grade of 75 grams per ton. Probably not supposed to do those kind of comparisons, but this is what I want people to think about, because the deposit's only 2 meters thick. So it only cost us 70,000 Australian dollars to drill that out. And so if we were in a PFS on a 10 million ounce gold ore body, we'd be spending tens and tens of millions of dollars on the drilling. So unlike many PFSs, the cost of doing the work is basically very small, and that'll be same through to the definitive feasibility study. We might need to raise something, I don't know, maybe up to 10 million or something like that to do the DFS. But again, 1/10 of the price of a major traditional discovery. So the cost of that. I'll just deal with the capex quickly. So the capex at 250 mil is the capital efficiency is about compared to the NPV, sort of 4 to 5. So that's actually very good. If we look at someone like Alpha HPA, they're building a $500 million plant. It will do certain things that we can't, but the capex on that is huge. So they've got a lot of government grants towards that.
And Mike, you mentioned around trying to find a world-class project, and you've obviously got some other projects. Could you talk about what's in the portfolio at the moment, some of the other projects, and I suppose the capital allocation towards the main project?
Yeah, look, as the studies progress on Lake Hope, we're getting more and more focused on that. And so we are trying to rationalise the portfolio. So we have a spin-out private group is trying to list gold copper assets that are from the Lachlan Fold Belt. That was where we had one of our sort of modest discoveries, a unique system nowhere else in Australia, at the Commonwealth and Silica Hill area. And there's plenty of scope there to increase it. It's very similar to the Eskay Creek world-class mine in British Columbia. It's the only thing like it in Australia. And then we've also got a lot of ground at Broken Hill. So people might remember, who are familiar with Impact, we were one of the first cohort on the BHP Explore program last year. And we pushed forward significantly with ground holdings at Broken Hill. And we've still got sort of news to come there, but we're looking for a joint venture partner in that project. And as we're rationalising this ground, we are making sure that we still hold equity in the project at the project level, because I never picked up a piece of ground that I didn't think there was going to be a significant discovery on it. So we really want to keep our hands on that. And so really we've got a bit of focus on our Arkham project here in Western Australia. We have it's copper, nickel, plus possibly some gold, and we received $180,000 in co-funding from the West Australian government scheme just recently. So we'll gear up for a drill program there late this year or the start of next year. But assuming that we're successful in the PFS, we'll get incredibly focused on Lake Hope at the DFS level next year.
Yeah, and just touching on that, obviously the focus is on Lake Hope, but the catalysts or the milestones that shareholders should be looking out for in the next 12 months, and I suppose a bit of a timeline from where you are now, 18 months into to the next couple of years.
Yeah. So we'll close to lodging our first ever mining lease, which will go in hopefully next week or the week after, and that will catalyse a whole lot of things in terms of discussions with the Naju traditional Naju Aboriginal group, traditional owners of the land upon we hope to build the mine, and they've been extremely supportive so far. So that's been very good. And there's various other environmental surveys that need to be done, but basically the mine is almost locked and loaded, if you like. The other thing we've been working on is where the plant is going to be. We found a very accessible piece of ground in Kwinana. It has a lot of advantages for reagent availability, both the material that we need and also the material that we're going to sell in terms of byproducts. So that PFS is the big thing for us this year, to complete that by the end of this year. We're looking at getting our foot on a pilot plant. So really next year will be all about getting samples out to clients into qualification, and then rolling into the definitive feasibility study, and hopefully FID in 2026 probably, and scaling up from there. So it's really the journey to production from where we are now.
Mike, one further question. There's been a lot of talk about technological advances in the world, particularly with things like AI. Is there anything out there from a technological point of view that you're interested in watching about the change of use of product with some of these commodities? Yeah, look,
I haven't been quoted too often yet as saying it, but the whole mining industry is a little bit under threat by technology, and in particular from material science. There's a lot of clever people around the world, coming up with other alternatives, or other ways of making materials that don't require as much metal, and that's something that the whole industry should be aware of. I like to say we're kind of a Stone Age. We're a Stone Age business in an exponentially changing world, and that's because of three reasons. And is that, first of all, despite all the technology and all the AI that we can apply to data once we've got it, we still can't drill a hole any quicker than we could drill a hole 50 years ago.
That's a good point. Yep.
We can't get an assay any quicker from the laboratory than we could 30 years ago, and it takes longer to get the mines permitted. And that is an industry, if you would sell it to anybody else, that's ripe for disruption. And so, people need to keep their eye on what's happening in material science.
Mike, thank you so much for being part of this podcast series and giving us the story of Impact Minerals from the early days to now the focus on the Lake Hope project. I wish you all the best and look forward to catching up.
Great. Thanks a lot, Chris.